The October US government shutdown crisis and countdown to debt default resulted in much media hysteria that was accompanied by commentary of not just a bear market but even a stock market crash as being imminent. At the time, I pointed out that all such calls for imminent doom would likely go the same way of the preceding bear market calls that are likened to top pickers lining up "I am Spartacus" style to proclaim that the bull market top was in. However, we all know what happened to Spartacus and his followers, for they all ended up getting crucified. And we don't have to look far to see what happened following each end of the bull market top call of just this year, let alone a bull market that is now into its 5th year. Quoting what I stated at the time, the US government shutdown is great news because for bull markets to persist and continue, then they need bad news every few months. They need most people to be skeptical and too afraid to invest. And so it continues to be the case for the duration of this bull market, where over 90% of market commenters have been wrong and continue to be wrong. Everyone who just proclaimed its end is wrong and will be crucified, just as they've been crucified at every market turn for the past 5 years. Understand this. This stock stealth bull market is one of the greatest bull markets in history. You want to love markets that are hated, and you want to be afraid of markets that are loved. Despite subsequently the stock market breaking to new all-time highs, this, however, has not meant that the bearish tripe has relented. Not for a moment. Instead, recent forecasts in the media has been on, and the blogosphere has been on the likes of John P Hussman's highly regurgitated article that warns of a 40 to 55% stock market crash. Whereas, those with experience in trading understand that a crash is a panic event that cannot be forecast, only traded. Stock market technical review. Elliott waves. There's no discernible simple pattern, so I'm going to ignore Elliott wave theory for this exercise. MACD is converging towards a cross, which suggests a correction of sorts, nothing major, just unwinding of an overbought state. Trend analysis. The stock market is clearly in a rising channel and has just hit the top of the channel, which suggests that the next stop would be the bottom of the range. However, the final resolution of this pattern for a bull market is to break out of the range to the upside. So what's needed to determine is the most probable time for such a breakout, which would likely time with a Santa rally. Seasonal analysis. December is less than 3 weeks away, the optimum time for Santas to deliver their traditional seasonal rallies. The overall seasonal pattern for the Dow is, after a week September to October, is to soar for the next 3 to 5 months. This year we have had the week September to October and the stock market is soaring well into November. The unfolding seasonal pattern suggests that the stock market could extend its rally all the way into March 2014. Price targets. The immediate target is the upper end of the range, on breaking of which the trend trajectory would target at least Dow 17,000, with an extended forecast in my Stock Stealth Bull Market ebook implying an eventual Dow bull market swing target of 18,000. On the downside, the strong channel support comes in along the previous highs, implying around 1550 to 15,700 to contain minor corrections over the next few weeks. and further out if the Dow should plunge. There's strong support at 15,000. Formulating a stock market conclusion. The significant factor in determining a trend forecast conclusion is to consider when will the stock market break out of its rising channel. For the direction of the breakout is set as being upwards because that is the direction that bull markets resolve in. But when? In terms of probability, that would be best during a December rally, which it fits in with the above analysis, suggesting a minor correction during the next couple of weeks or so to prep the market for a December rally that breaks above the channel and then would act as support for the Dow going into January. Stock market forecast final conclusion. I expect the stock market to break above the upper channel of around 15,800 and be trading above 16,000 by late December. Furthermore, my analysis suggests that despite a volatile January that will likely bring forward many doom merchants to proclaim another bear market crash, etc., etc., the stock market rally will likely continue all the way into March 2014, when it is highly probable that the Dow will be trading above 17,000. Please remember to subscribe to this YouTube channel to keep updated on further market analysis and forecast videos.